Stocks start a new month after closing out a wild August. Last month, we saw a weaker than expected jobs report, uncertainty over the Trump administration's tariffs, and the president's targeting of the Federal Reserve. Through it all, the stocks have continued to steadily rise. Scott Gwatney, a financial advisor from Burns Financial, joins us this morning to look back over what's happened so far this year and look ahead to what we can expect the rest of 2025. Scott, good morning. Thanks for being with us.
Good morning. Thanks for having me.
So again, a lot has happened in the 9 months of 2025 thus far. Let's kind of recap what's happened and how what has happened has impacted the market.
Well, we saw the first quarter, tariffs were announced. We saw that big pullback right at the end of the first quarter. Second quarter, we've had a really good comeback, still some volatility, stronger than expected earnings in some sectors. And you see that in, tech and healthcare, but other sectors are still struggling because we're still trying to get a definition on what exactly are the tariffs going to affect, and we still have some countries out there that we've kicked the can down the road a little bit. So we're still waiting on those countries to see how they impact, certain companies here in the U.S.
And then last month's jobs report, did that do anything to the market?
It did. It showed a little bit weaker, and that kind of put more emphasis on, really kind of as we get into this third quarter, as we see the results in the second quarter, what's the Fed going to do? Are these tariffs in these countries are still working to negotiate with the administration? Are they going to truly come through as we see fit? So that kind of puts more of a focus on really the second half of this year towards the end. What's the Fed going to do with the interest rates to help not only the job market, but inflation and everything else?
And then, of course, people are looking we're looking to the fall already. This year's flown by, my goodness. So before you know it, people are going to be talking holidays, holiday travel, already looking ahead to 2026. So what, if anything, specific can people expect in these next few months?
I would say from a market perspective, probably some more volatility. As soon as we get, through the tariffs, struggle, and then we get into what the Fed's going to do, what the Fed's decision is going to do is affect, holiday travel, holiday shopping, things like that. So that's going to be a point of topic of, as these tariffs take effect, where are we going to buy certain gifts from, certain toys from? So we'll have a better idea of that as the market goes forward. But really just a little bit more volatility. I think it's still going to be positive, especially as we get more clarity, but it is going to be a little bit choppy going forward.
For people at home right now, Scott, what, if anything, do you suggest that they do to prepare for this uncertainty? I mean, what can you do to prepare for uncertainty?
It's hard to do that, but I tell everyone just double check everything. Get a second opinion, meet with your financial advisor, financial planner. When it comes to retirement savings, it can be scary. Don't make any, sudden knee-jerk reactions to bad news or bad performances. And really, have communication and make sure that you're allocated, correctly. And then make sure, budget-wise, that you're prepared in case, inflation doesn't get any better. I would prepare to say, hey, what's our outlook for holiday spending look like now? And then how that, if it gets affected, it gets better, great. If it gets worse, just kind of have an idea of, okay, well, how are we doing right now? Because I think it will get better. It just could be a little choppy getting there.
All right, Scott, thanks so much for kind of putting things into perspective. As you mentioned, it's uncertain, but all you can do is watch and wait, be prepared, and not react.
Be prepared.
No knee-jerk reactions.
Absolutely.
Ever. All right, thanks so much. We appreciate your time this morning.
Thanks for having me.